Breaking news. So as we watch this intraday picture, you see the Dow on the far right part of the screen diving. So let's show you the heat map, which is turning cold rather quickly. We've got the Dow down about 207 points. Lows here, NVIDIA, United Health, and Procter & Gamble. Okay, so we have NVIDIA down about 2%. It was not down anywhere near that earlier. UNH down 2%. Procter & Gamble down 1.7%, followed by Boeing, Sherwin-Williams, and Walmart. Listen, maybe it is simply that we don't have details on the Trump-Xi tariff discussion, just that, quote, there's a deal, as President Trump said. But we do know this. Tesla is tanking. Look at it now, down 16%, by the way. If it closes down anywhere below 15%, which is where it is now, certainly, that would be the worst close, the biggest drop since September 8th of 2020. So right now, Tesla's at $277. Bob Dahl of Crossmark said he came into today already short the stock. A lot of people were positive on it, but there is now a big battle between President Trump and Elon Musk, who is dumping all over President Trump's tax and spend bill. And in the Oval Office today, you heard, and we're going to show you more of this coming up, and he is already into the late afternoon with just 34 minutes left to trade, still posting on Truth Social, that Elon Musk has fallen out of favor with President Trump. So again, stock down 16.5%. So from battles like that to possible détente, yeah, do we finally have détente in the trade war with China? President Trump confirming after an hour-and-a-half-long phone call today with Chinese President Xi Jinping that officials from both countries will actually meet soon to try to resolve the economic tensions. So what does that mean for a gigantic equipment manufacturer like Oshkosh, which not only manufactures across 19 different countries, including China, and is already getting hit by a 22.5% duty in Europe on their Chinese-manufactured JLG goods like boom lifts, telehandlers, and scissor lifts? Oshkosh says it's already ahead of the game with its own dedicated tariff task force. And look at the stock. On a down day, Oshkosh jumping 6.7%. So perfect. First on Fox Business, Oshkosh Corporation President and CEO John Pfeifer. Oshkosh, of course, produces essential service vehicles, from fire trucks and concrete mixers to military combat vehicles. Great to have you. You're just coming from your investor day.
I am.
What the heck did you say that has the stock jumping this high?
Well, I think we have been undervalued by the market for a little while, and we kind of laid out what we do. You made mention of it in your intro. We serve critical industries. We work to serve industries that all of us can't live without. We're in all of our communities. We manage things at airports. We manage things in neighborhoods. We manage things on construction sites. We support soldiers and firefighters. And we deliver for those everyday heroes technology that they need for the future. So we're creating things that drive the airport of the future to be more efficient, the job site, construction sites becoming more efficient because of the technology that we have, and neighborhoods, whether it's delivery vehicles or environmental vehicles. We're driving the future of these areas because of the technology that we have.
You were already doing that coming into today.
We were.
What do you think you said that has rejuvenated the stock, certainly from earlier in the session?
I think, well, what we did today, I mean, really what we did today was we gave concrete forecasts out for 3 years to 2028, which we had not done yet. So we said, hey, we're going to grow by nearly 10% compounded annual growth rate between now and 2028. We are going to take our operating margin up 200 to 400 basis points to 12 to 14%, and we're going to deliver $18 to $22 of earnings per share in 2028, with a lot of free cash flow that comes with all that. When you go and you give those types of specifics out 3 years, I think that's maybe what wakes up the market a little bit.
I think so. How are you so confident amid the tariffs? Because we still don't know what's going to happen. And by the way, did you give an update to the tariff impact? Because you've already organized a tariff task force.
We have.
You're not waiting around for the government to clarify in any way, shape, or form. But you had said in April that the impact could be as bad as $1 per share. You would try to mitigate that down to 50 cents.
Half that.
Has any of that been updated to be less than?
We still have the same belief that maybe it's going to cost us about 50% net this year. But when we look at tariffs, hey, we have a bit of an advantage in this, in that while we are a global company, we are an American company, and almost everything that we sell in America is made in America. So that gives us a bit of an advantage. Now, we're a global company. We've got global supply chains. And so there are tariff impacts that we have to deal with. That's what we talked about.
Which is the worst right now?
What's the worst tariff right now?
For you.
The biggest countries that we pay attention to are Europe, China, Mexico and Canada are very, very important, but we benefit from USMCA, so that's not quite as big of a risk right now. But as you know, it's changing. What we need to do, we're in kind of two 90-day holding periods, one with a lot of countries around the world, one with China. When that all shakes out and we see what the net result is in terms of the tariff landscape, we will then be able to go to work, and we will do everything we can to mitigate the impact of the tariffs in our supply chain, because the last thing that we want to do is pass on price to our customers. We want to protect our customers from any impact that this might cause. So that's our intention.
Price hikes. I mean, you have a nice deal with the U.S. Postal Service.
We do,
to create all kinds of vehicles for them.
Right. We're in production today on all that.
Congratulations. But can you hold off on the price hikes?
Well, that's what our intent is going to be. You know, we have to see where the tariffs shake out and exactly where what the ultimate tariffs are on different countries. The U.S. Postal Service truck is built here in the United States of America. It's got a lot of traditional household names as our supply base from American companies, but there is some content that comes from places like Mexico on that vehicle, so
John,
we have to pay attention to that.
The semiconductor industry is not thrilled with the tariffs or this war with China because they would love to sell into that market.
Yeah.
Are you with President Trump, or do you feel like the semiconductor guys do?
So here's what we think about trade. So our view on trade is, of course, we're a global manufacturer. So I think any global manufacturer is going to say, hey, we like free trade. However, we like fair trade. Right?
Has it been unfair? Do you see
in certain areas it has been unfair? Yes.
Where the worst? Who's the worst?
We have had support from the government in dealing with some of the unfair traders that we have had to go against.
Such as China?
So whenever, well, I don't want to call anybody out specifically, but
I'm trying to get you to do that.
But what we support is, yes, if there's unfair trade, it must be dealt with. But beyond the unfair trade, you know, I think that we believe that free trade is usually the best policy in terms of economic growth and development.
Your stock is now up 7.5%, climbing as you speak. So people like this story, and they're hearing from you that there is this opportunity. Your input costs, a lot of metal goes into this. We have 50% tariffs on aluminum and steel now.
Right.
You're telling me that's not going to hammer you somehow?
Well, right now we're protected short term because we always protect ourselves short term with locks on raw material. Because we do buy a lot of steel and we buy a lot of aluminum, so we have to pay very close attention to that. So what we're paying attention to is how does this impact the domestic prices for these commodities? And that will dictate to us what we need to do to try to mitigate the steel and aluminum tariffs. I think the thing that we pay attention to most on steel and aluminum tariffs is that if the price of steel and aluminum becomes extremely high domestically in the U.S., and it's not saying that that's going to happen, it's what we pay attention to whether or not that will happen, that can make it tough for us to compete and export to global markets where we have competitors that have a lower input cost. So we have to pay attention to those dynamics.
And you're in a lot of countries, so good luck with that.
Yeah, thank you.
And it's working for now. The stock is up. John Pfeifer, great to have you. Thank you so much.